Are there other avenues to explore to get the federal regulatory nod here in the U.S., or is this it?
Oh, gosh, there are many. One of which is that Custodia, it is publicly disclosed, filed suit against the Federal Reserve last June, and that is ongoing. And ultimately, the question becomes, do the states have the right to charter banks, or does the Fed, which voted itself a veto over state bank chartering decisions, is the federal judicial branch going to uphold that veto, which has historically never existed? And crypto seems to be the place where this is going to be tested in the courts.
Yeah, and of course, there is the huge question around Wyoming looming over this, Caitlin. But also, the Fed had flagged issues with your risk management framework. To quote directly, they said it wasn't sufficient to address concerns regarding the heightened risks associated with your proposed crypto activities, including the ability to mitigate money laundering and terrorism financing risks. Have you adjusted your framework, your business practices at all in response to this?
Oh, sure. Yes, definitely. But here's the interesting thing. It gets to what Nick was saying. The Fed had never publicly, until the Custodia order, stated that it was opposed to the use of open, public, permissionless blockchains. Now, it's interesting because it approved the use of open, public, permissionless blockchains for large banks, but it doesn't want to let any challengers in to challenge the incumbents, it would seem. But it's the first time that the Fed has actually said that unless every owner of every wallet can be identified, that it can't touch the banking system. Now, that was the first, as Nick pointed out in your prior clip, that this is very real, that the Biden administration is executing an all-of-government crackdown on the crypto industry and trying to shove it all offshore, while letting the large incumbents who have been approved to continue for now. But to Nick's point, definitely they're under pressure as well.
Caitlin, I want to return to a point that you made in response to Kayleigh, that you have adjusted your business practices in the wake of this rejection from the Fed. Do you get the sense that it'll ever get over the line, or is it going to take new leadership at the Fed, at U.S. regulators, to ever get any meaningful movement on some of these proposals?
Well, we know in the case of Custodia that the White House was involved with the denial back on January 27th. We know that because it had been leaked a couple of days before the Fed voted on it, that our application was going to be voted down. And within hours of us sending a letter to the general counsel of the Fed, a reporter was reading it back to us. Okay, so these kinds of situations, we knew this was very political from the beginning. And to be clear, Custodia is not taking third-party deposits yet. We have pivoted our business model. And stay tuned, we don't have any announcements yet. But unfortunately, what happened is that this became very politicized. And it's sad because I don't see this as a political issue. In fact, one of the things that happened at Miami is that you had 4 actual or potential presidential candidates from both sides of the aisle speaking in defense of digital assets. It tends to be more of a generational divide than a divide across traditional political lines.
So, Caitlin, it sounds like Custodia is still continuing this fight, but coming off of the Bitcoin conference down in Miami, do you get the sense that some of your peers might give up on the U.S. altogether, maybe look for friendlier regulation in other markets?
Oh, no doubt. Many have. And part of the reason why we're so widely supported by the industry is because we are fighting. Many others for example, we were asked to withdraw our application by the Fed at the same time as applicants to the OCC, which is the federal banking regulator, were asked to withdraw their applications, right? All applicants have due process rights, and yet we were all asked to withdraw our applications at the same time. We have that in writing from one of the reporters. Okay, so so all of us have been effectively denied one way or the other, and Custodia is the only one fighting. And so one of the interesting things is that the industry is really rallying around us because of the pending lawsuit and the fact that we stood up and said, no, this is not acceptable. We do have due process rights. And if we step back and say, from a policy perspective, what is the right answer here for the United States? The last thing it should be doing is shoving this all into the shadows. FTX was an offshore, not a U.S. regulated entity, and that's where the fraud occurred. We need U.S. regulated entities to prevent that kind of fraud. Excuse me.
Well, of course, Caitlin, it's not just the collapse of FTX that is haunting the regulatory bodies here in the U.S. In theory, it is also the failures of banks we have seen over the course of recent months. Silicon Valley Bank and Signature Bank and Silvergate also, I would mention. So as we talk about that list of banks that failed, all of which did have exposure to crypto depositors, what banks can step in and fill that void?
Well, there aren't many. That is one of the issues. Sorry for the coughing spell here.
It's okay. If you need a minute, that's all right.
Sorry about that. There aren't many. That's the issue. But one of the things that I learned in Miami is just how many offshore banks are providing U.S. dollar services to the crypto industry. So the federal regulators are cutting off their head to spite their feet. I just use the wrong analogy, but you see the point. Their strategy is to try to kill it. And in fact, all they've done is push it into the shadows and push it offshore, which means that they're going to be playing whack-a-mole because this is not going away. And so you will continue to see the fraudsters operating. And I just heard yesterday about a terrible case of someone who was defrauded, outright fraud in DeFi. And it was onshore in the United States. And it's really sad because if we had regulated entities, that person very likely would not have been defrauded. And so what the U.S., specifically the Biden administration's policies have created is a situation where the only ones that operate in the United States are those operating in the shadows. Everybody else is under pressure to leave, only a few of us staying and fighting. And yet the risks that they portray as being so risky, which is the connectivity to the US dollar system, it's happening. It's just happening offshore and outside of their vision and their regulatory purview. And so it's going to come back onshore to haunt them. History will not be kind to this regulatory crackdown. The better approach is the approach that, ironically, all of the prospective and actual presidential candidates, again, from both sides of the aisle who spoke in Miami, said we need reasonably enabling regulation so that this industry can exist in the United States. And that's where naturally most people will end up going instead of where we are now, which is it's all offshore and in the shadows, not entirely offshore, but increasingly being shoved there by the Biden administration. And as a result, the biggest grifters and criminals are able to pick off, unfortunately, innocent victims in the United States. It's brutal. And those of us who've been around this industry for a long time very much are dumbfounded by the crazy strategy of the policy here, which is the exact opposite of what it should be doing, trying to bring all of this into lit regulated markets.